It's a modest rally. Okay, we're up 160 on the Dow. That's shy of a half percentage point. S&P is up a half percentage point. David Stryzewski joins me now to talk about the market. I want you to talk about the CPI, the Consumer Price Index. 3.4% inflation over the past year at the consumer level. What does this mean for the markets, the stock market, going forward?
Hey, well, good morning, Stuart. And, the market this morning is responding positively to this, cooler than expected report. And just for the viewer's sake, the last three reports that we received this year have been surprises to the upside. So this was a welcome surprise here, mostly hitting expectations with just that slightly cooler here on the core side. And so as we look at things trajecting here forward, there is going to be some focus and attention probably put back on, can Powell cut some rates because we're seeing some inflation coming down, but I'm not necessarily convinced that that is the exact trend.
So you don't feel that the Fed is losing the battle against inflation, is it?
Well, Stuart, I do believe that the Fed is losing the battle with inflation right now. And I think it's very apparent. Yesterday we just got a PPI report, which surprised to the upside. And so PPI talks about the wholesale costs, or what it costs for the producers to manufacture things. That'll be in next month and the month following CPI report. That's surprise to the upside. One of the things I like to do is I like to take the last 3 months and I like to project a forward-looking number, not just looking in the rearview mirror. But if we take a forward-looking number right now on CPI, we're looking at 4.4% expected for the year if the last 3 months are indicative of the future. That is a very sticky inflation figure. I do not think that this is going to bode well. And I think the Fed is stuck between a rock and a hard place here, and they will probably be forced to cut. I don't think they'll do it intentionally. They'll be forced to cut at some point later this year.
Forced to cut. That's interesting. All right, a 4.4% inflation rate as you project it going forward, that would not be good news for the stock market, I do not believe. All right, David, thanks for joining us. As we go out, I'll show you that. The 10-year Treasury yield is 4.38% as we speak. Next, the White